Hey, it's Clay, and this will be a video chart on ticker symbol DARE. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So while this here may look like several days worth of time, it's actually today's price action broken down into 30-minute time slices. I like to this time frame, and does a good job of telling the quote-unquote story of the price, and then makes mapping out where levels of support and resistance a bit easier to see. Pretty eventful day here. The majority of the volume came during that first 30 minutes, which you can see right there. And then from there, now I'm not saying this towards the company because I don't know anything about the company, just based on how the price, traded. So from a price action perspective, based on how the price acted, gap and trap, pump and dump, whatever you want to call it, that's what essentially happened here. If you're newer, what do I mean by gap and trap? Well, the price on Friday closed down around here, and then all of a sudden Monday, the price opened right there. So the gap up, after the gap up, price actually ran all the way up there. Some poor souls bought there, and then from there, it pretty much went down the rest of the way. But that all does lead to the interesting setup going forward, and this will mean a little bit more to those of you that have traded for a while. But if you have, then I'm sure you've seen stocks that, make a great move and then all of a sudden get, totally beat to the downside. And then they approach, interesting technical areas, and that's what we have here. And the interesting technical area is that previous breakout point down here at 90 cents. And this is just based around a foundational rule in charting stating when levels of resistance are broken and closed above, you want to see them act as support. And that's the whole premise here. Going into today, that 90-cent mark, was the level that, continually knocked the price back down, and the price just couldn't get up above it. But now that the price is above it, like I said, that would be considered an area of support. And you can see that the price right now is right around that area. Now, don't get me wrong, and I really wish I could say trading was this easy. Just because it's an area of support does not mean that for sure this thing is going to bounce back upwards. But would it be shocking to see some sort of bounce? No, that would not be shocking at all. So that's why it's worth at least keeping an eye on the 90-cent mark. The must-hold level I would definitely consider down here at 87. I call 87 a must-hold level, because if the price were to come down here and then just continue on down and, let's just say go down to 85, 84, at that point, from a very literal perspective, the price would be down at its lows from before, the big movement happened. And that is the epitome of a pump and dump, where you have a movement that makes a huge move to the upside, and then within the time span of just a few days, literally goes right back to where it started. Like I said, if that's not a pump and dump, then I don't know what is. Again, I'm not saying that's what's going to occur, but that's why that 87-cent mark is definitely very, very important going into tomorrow and really the remainder of the week. But as of right now, price is trying to consolidate out here, so we'll see if there can be some sort of secondary bounce or not. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.